The reason why almost 80% of people are having a hard time investing their money hides in the fact that investment does not produce the same rewarding feeling as the purchase of smartphone, food, car, house, and similar. In other words, nothing is taking the physical shape in the purchase process. And since we are visual creatures, it triggers the defense mechanism caused by our elemental fear of the unknown, common for every soul on this planet, because what we don't see scares us. Let's assess how we can remove the built-in resistance to start investing efficiently. Coming up. Hey everyone, this is Sajid here. If you're new to this channel, we provide directions on how to establish yourself as a successful entrepreneur based on sound strategies and tactics. This session is a part of investment and I will provide some insights into Forex, also known as foreign exchange market, going back to original thought of built-in resistance. In simple words, it's more rewarding to spend $50 on dinner that will just go through your stomach than to invest that money in stock or trade currency. You can see, smell, and taste the dinner. You can feel the effect when that food is going through your system. But when you trade currency or buy stock, nothing happens. Nothing gets visualized. The same applies to everything else you're purchasing, including the utility bills, because you can see the light and feel the warmth coming from the central air conditioning system. Even the bill you're paying for the internet gets connected with the physical thing, because you know how some strange particles are rushing through the cables, delivering information that you can see with your own eyes on a device that you are touching with your own hands, just like now. That's why you are perceiving investments as something awkward and uncomfortable. There's no physical representation of your purchase, but it's still a purchase. But you don't see, hear, taste, or feel it. Maybe some of us can feel it. Before we take a deeper dive, make sure to like and subscribe. Hit the bell icon so you can get notifications as soon as I put more content. Let's go over the tactics pertaining to capitalizing on short-term, high-risk investments. Lower the risk. Lower to none is the revenue. Higher the risk, on the other hand, while it may generate significant losses, is still the fastest way to launch your life on a certain growth trajectory path. One way to do it is to trade Forex. Forex is a decentralized over-the-counter market for trading currencies. You can buy, sell, exchange, and speculate currencies. There are a number of reasons for currencies to fluctuate. For example, monetary policy of Federal Reserve here in US, and other countries have central banks. Political stability is another factor. Interest rates, trade deficits, just to name a few. Why on earth we want to explore world of Forex business? Because if you are looking for a big fish, go to the ocean. Let's clarify this. New York Stock Exchange is a $26 billion market a day trade volume, give or take. Forex is a $5.3 trillion, with the T, market a day. Getting the picture? Everything that's being traded around the globe, every bond, every stock, every gram of gold, or a gallon of oil, every purchased good, every exchange, all eventually finds its way to the Forex market. If Apple, for instance, wants to buy some Japanese goods technology, it has to buy yens. The action will then sell dollars and move the market. Think of Forex as the roof market. Even better, think about every monetary exchange as the single drop of water in a creek that flows into the river, which ends in the ocean. And that ocean, my friends, is the Forex. For that reason, it's less exposed to random individual manipulation compared to stock or commodity stocks, such as New York Stock Exchange. For instance, if you are someone who holds and maintains billions of dollars in some hedge fund, all you need to do is to make some extra money, is to pick some poor performing, long forgotten company and start buying stocks under anyone's radar. When you buy enough, you make the interview and slip the intel, telling the world how you acquired an X amount of stocks of that particular company. What happens next? Wall Street guys, always thirsty for some fresh blood to offer to their clients, are picking up the intel and start dialing numbers. By the end of that day, stocks you bought went sky high. The crowd has moved in the predicted direction. Just before the closing bell, you call your broker and tell him to sell everything. You made millions, while hundreds of poor schmucks lost billions. Because in reality, that company is worthless. By using your influence, you have created an artificial bubble. Something like this cannot happen on the Forex market. It's so huge that only the US Federal Reserve Bank can influence the market in such a way. But that's predictable in most cases and relatively desirable because traders do appreciate a healthy level of volatility. That fact creates a fertile ground for small players like us, who is using fundamental, technical, and sentimental analysis to predict the future movement of the currency pair and make a profit on a pip spread. The spread is usually measured in pip, which is the smallest unit of the price movement of the currency pair. For most currency pairs, 1 pip is equal to 0.0001 decimal place, with few exceptions like US dollar to Japanese pair typically go to second decimal place. More to come on follow-up sessions. Let's use the euro and US dollar currency pair, the most traded pair, by the way, as an example. If you think that euro will drop in value, you will execute a sell order. On the other hand, if you think euro will increase in value, you will execute a buy order. Confusing? If you have ever visited some foreign country, you have participated in the Forex market without even realizing it. How? You landed and exchanged your home currency for the currency of the country you were visiting. If there's something left on your departure back home, you went to the bank and made the reserve exchange, buying back your home currency. So you are influenced the money market. The Forex, it's basically what you do when trading FX. If you're interested in speculative trading on the world's largest and most liquid market, I would like to recommend the following steps. After all, you do need to learn and practice it before you go with the live account. Step number 1, learn. Go to, for example, babypips.com and enroll in their free comprehensive school of Forex. Step 2, practice. Open a demo account at one of the Forex trading platforms such as fxcm.com, plus500.com, markets.com, and similar. Step 3, trade. Start a live account and real-time trading. Forex is for the smart players. I will provide series of training videos to understand Forex trading, and it will be a journey to help you become better at this trading opportunity over time. Check out my book on Amazon, a must buy for smart investing. This book covers common beginner's mistake and 15 tips to avoid major losses, along with key areas related to capitalizing on short-term, medium-term, and long-term investments. Down below in comment section, let me know if you have used any Forex platform and what you liked or didn't like about the platform. Thank you for listening in, and take care.